Good evening, everybody. This is Thomas Beyer speaking. I'm the president of the Prestigious Properties Group. Appreciate you taking time out of your schedule and joining us for this 50-minute webinar tonight. I will start the presentation for the first 20-25 minutes, and then I will be joined by Scotty. Scotty Grubb is the sales manager of our group and VP in charge of everything related to investments and sales. So he will be talking specifically about the Cold Lake opportunity. We were excited to present that to you tonight. If you have perhaps seen it in November at one of our live sessions in the cities, it's an updated version of that, a bit more detailed, because it has evolved obviously for the last 3-4 months. Lots of stuff has happened. We will start in talking about where's Cold Lake and the whole oil story, because clearly oil is in the news today, and there's this big concern that Alberta will disappear off the map, and oil is just not a valuable commodity anymore, and jobs are disappearing, and that is just not the case. So we need to address that issue and the associated demand side, and we'll do that in the first 20 minutes, and then Scotty will talk specifically about the opportunity in Cold Lake. Like to point out that we are making some forward-looking statements here, and we're talking about some ROI returns which we expect you to make if you invest and buy a lot. Like to point out, of course, that there's no guarantees in life besides death and taxes. So we just make some prudent assumptions here, but in the end you are buying a piece of real estate, and we assume there is a solid demand for that. But of course we don't know where oil will be in 2 years or in 5 years. So just want to point that out to keep the lawyers happy. So the question is, where's Cold Lake? Cold Lake is in Alberta at the border to Saskatchewan. And yes, it does have a lake. We'll show you some pictures in a few minutes. What you see on this map here is some of the pipelines which exist today within Alberta and down to the U.S., and there's far more pipelines in the U.S. we could have shown you as well. But let's start with some basic economic fundamentals about Cold Lake and Alberta in general. So that what you see on the right is a map of Alberta, Calgary in the bottom right there, and then Edmonton, which are the 3 major centers, and we have some major investments in all of these 3 centers. But about 3-4 years ago, we decided to invest some of the money, which we have under management, in growth regions which grow faster than perhaps Edmonton or Calgary, which is still solid. And like perhaps you did, I also missed the Fort McMurray boom in the 1990s. So what you see just north of Edmonton, which is the large yellow blob, which is the oil sands region around Fort McMurray. There's a smaller section to the west of that in the Peace River region. And then to the right of Edmonton, about 3 hours by car on the Saskatchewan border and stretching actually into Saskatchewan, is the Cold Lake oil sands. So there's a highway from Edmonton, and once you fly into Edmonton, it's about a 3-hour drive here in Cold Lake. The major activity in Cold Lake centers around the oil sands, which is bitumen-like heavy oil in the ground. And if you look at the map here, much of the oil sands around Fort McMurray is open pit mining versus Cold Lake, and also quite a bit of the oil sands around Fort McMurray is steam-assisted gravity drainage further in the ground. I will show some pictures on that. It's a different technology than open pit mining. If you detect a bit of an accent, I hail originally from one of the NATO countries in Europe, and Cold Lake was known to me, almost 40 years ago, because they used to train, or still train to this day, the NATO pilots for bad weather flying and low-level flying in adverse conditions, let's call it. You can't fly 30 or 40 meters above ground in Europe because it's so densely populated. However, you can do that in Cold Lake. So there's a very large Air Force base It's in fact the largest Air Force base in Canada. And if you follow the news and hear about Iraq and ISIS and Libya a few years ago, a lot of these missions are prepared out of Cold Lake. It's a very large weapons range where they test weapons and low-level flying. And there's a lot of activity in Cold Lake and has been there for a number of decades, which provides some economic stability, which is unusual for a small town, which is centered around oil and gas. So in addition to the Air Force Base, there is over $4 billion in new capital projects, which is huge for a small town of not even 20,000 people. And the average income of folks working in Cold Lake is over $100,000. So it's higher than at jobs in Edmonton, for example, or Calgary. Yet the house prices are currently around the $400,000 mark. And Scotty will talk about that a bit more, what you can get for $400,000, which is what you pay roughly in Edmonton with a higher income. So let's talk about some industrial activity in Cold Lake. So there's the lake. The sort of third on the right is actually already in Saskatchewan. What you see is various squares, which are various oil field regions owned by numerous companies such as CNRL, Imperial Oil, or Husky, which is their right to extract oil sands from below the ground. In fact, one of the oil sands fields is below the weapons range and below the airfields. So the technology used is called SAGD, or Steam Assisted Gravity Drainage, which, unlike Fort McMurray, which is open pit mining, is injection of steam into the ground, which gets heated on the surface. And then the hot steam loosens up the oil sands mixture, makes it slushy, and under pressure it forces it up to the surface again. And you have basically a two-pipe system in a loop. And a lot of the activity now is happening on the surface, and you don't see any surface disruption like you would see in Fort McMurray with, tailing ponds and ugly trucks driving around and really huge scars in the landscape. You'd see nothing of that. So all you see once in a while is a sort of a gym-sized warehouse where all the equipment is hidden, and a lot of the water recycling and sand extraction from the oil is done in that warehouse. So there's some good economics for oil sands development in the region. Even with oil now in the sort of $60 range, it's still continuing. It has the so-called SAGD, or also called thermal in situ or in place projects, which are the largest in the world. So it's a very large manpower intensive operation. And it has a very low environmental impact. As I mentioned, unlike Fort McMurray, you don't see much on the surface. It's all done underground, basically. So it's a more green oil sands extraction, if you want to call it. Well, let's look at some pictures of Cold Lake then and now, and let's talk about some oil-related facts as well. So here's a picture of Cold Lake, perhaps 30, 40, 50 years ago. Today, it actually has a marina. You can go water skiing there and windsurfing and sailing in the summer. And our land, and you'll see some pictures by Scotty later, is just north of this marina here, very close to the lake, about 50 meters from the lake is where the land is. So it's a much prettier part of the world to live in than, for example, in Fort McMurray. So you have today various hotels, like Best Western here, Walmart is there, Sears, Rona, Canadian Tire, and you have the other collection of Tim Hortons and McDonald's and also Boston Pizza. So it's a fairly well-developed town now, a rec center, high schools, four-lane highway, quite a busy city. Let's talk about Cold Lake and oil a bit, because obviously that has a big impact on a town which growth is dependent on oil prices. At the moment, they're pumping out about 500,000 barrels a day. And that's expected to rise by about 30% in the next 2 years. So despite the declining oil prices we've seen over the last 6 months, we still expect growth in production in Cold Lake. And that means people move there, lots of jobs, well-paying jobs, and therefore big investments in cities' infrastructure, as I mentioned. hockey rinks and rec centers and schools, and a vibrant art scene, and lots of families live there. Residential prices were up 15% year over year and have climbed roughly that per year for the last decade. So house prices are up about 150% in the last decade. And at the moment, the city of Cold Lake is annexing quite a bit of land around its town to accommodate the growth they envision for the next 50 years. So the annexation hasn't gone through, but will happen probably over the next few years. Here's some population charts over the last 10 years or so. That's about a 33 to 40% growth. Fairly steady growth, young population, lots of oil, no real years of decline, fairly sticky immigrants. So not like Fort Mac, which will fly in and fly out and then disappear after 2 years because it's not that great a place to live. It's a nice place to live, lots, as I mentioned, lake, and we show some pictures later what you can do there. Average age is in the low 30s, which means that those are people who have kids usually, so lots of family-centered activities in town. And the population is expected to grow as we've seen over the last 10 years. Probably a third of the population rents, and quite a bit of ownership in town. Let's look at maybe Cold Lake versus Fort McMurray, because Fort McMurray obviously started that oil sands boom over 20 years ago, and I missed that boom like you did perhaps as well, and that really caused me to invest and investigate Cold Lake a few years ago. So an average house in Fort McMurray, sometimes nicknamed Fort McMoney, started at the low 200,000s about 15 years ago, and today an average house is about a $750,000 to 800,000. But we've seen the growth basically flatline as they release new land, and as the average person can't afford an $800,000 house or $1 million house, which is what you pay today for a brand new home. It's over $1 million. So we expect and have seen flatline, even slight decline in prices in Fort McMurray because the prices are so high, so elevated. So compare that to Cold Lake. So this is the same chart starting in the year 2000. You see that start at about $100,000. You could have bought a house 15 years ago. Today that house is around $400,000. What you see here in the chart in the blue is a steady growth in house price. Usually when oil prices went up, you saw the house prices move up quickly for a year or two. And for example, 08, 09, when we saw oil prices also drop, in fact, below where we are today, we still saw a small increase in average house price, but obviously not a big one, but no decline either. So, and if you look at the oil price today, which went up from 90 to perhaps 60, we would expect a similar price movement, namely probably a flatlining. So I don't expect that the house price will continue sort of at that level of fairly steady growth we've seen over the last 15 years, but I expect it to continue along a more moderate, yet still healthy, 5 or 6% annual growth, not your 15% we've been seeing over the last decade. So, which is good for Alberta. It makes it, I think, a bit more affordable, and it makes it a bit more steady. Not these crazy years we had the last 2 or 3 years. It was crazy. Buildings we own, we'd seen rental increases by 10% a year. It's just not sustainable. And of course, if you read the media today, and here's some headlines from just this week, there's usually sort of two sides to the story. There is the doomsday view of the world. In the same article, for example, it says that Alberta is bleeding 31,000 jobs in the oil sector, and continue. It talks about low oil prices drowning Alberta finances, and that oil-rich Alberta sees mass job losses as crude prices slump. So those are the headlines you see typically, and that causes you to think that, my God, why should I invest in Alberta? What you often don't see in the headlines, but in the main text of these headlines or of these stories, is in that same article, even with these job losses, the overall employment will still rise 1% even in 2015, where we've seen very sharp drops in oil prices, and we've seen already the oil prices recover just the last month or so. And even with those declining oil royalties, Alberta is expected to still generate a small surplus. Although there is much discussion right now in Alberta about where to find more money and where to perhaps introduce healthcare premiums or additional gasoline charges. PST probably is probably not on the table, but discussion obviously is ongoing. And the Alberta government is back in black. Again, same article, same week. And as I mentioned earlier, despite the plunge in prices, Canada overall is expected to grow its oil output. And much of that growth is driven by oil sands projects, such as the ones in Cold Lake. So let's look at oil, for example, here just the last 3-4 months. And it came down from over $100, and we've seen the bottom probably in January in a sort of below 50s, and we've seen just the last few weeks already over $60. The consensus by numerous oil analysts is that we should see oil in the $60 range throughout this year, and likely in the 70s by next year, which is good enough for oil sands projects in Cold Lake. And despite the huge drop in oil price, we still don't see a recession in Alberta. We've seen sustained investment in the oil sands sector, not as high as perhaps 2012 or 2013 or 2014, but still significant. And the population growth is still expected to be 1.5%, which is 50% higher than the Canadian average. Again, the headline might say population growth plummets 50%, because it used to be 3% last year, right? Which is really unhealthy population growth. So if you have 1.5% population growth, that's a huge growth, and that drives house prices and rents upwards. And we expect, while weak this year, or weaker certainly, the Alberta economy to pick up steam again, certainly by next year. Here's a few projects on the go in Cold Lake. One is Foster Creek, where they have the first phase early next year, and another phase after that in early 17. And that is a project between $2.5 and $2.7 billion. And the CEO says, we've never laid staff off. We just find ways to make it more productive. So we see a bit of streamlining across Alberta, and price points coming down in terms of labor, because price points for labor were often unhealthy. Here's another project owned by Imperial Oil. They also expect that long-term plans, i.e. to steam the existing project and build more, is not affected by the near-term price fluctuations. And that Cold Lake is an asset that will be producing for the coming decades. So it's not just you put a well in, you pump well for a year or two, then you shut the well down. Once you put a project in the ground, it's a multi-decade project with long-term stable jobs. Unlike some of the smaller oil towns in Alberta, where you see a lot of drilling happening, which are easy to shut down and easy to open again. So you see a much more sustained growth in the Cold Lake region. And again, this is a project they expect to expand, which is a $2 billion investment in the region. Again, that's a huge investment for a small town. Here's another project called OSUM, or OSUM, which is an acquisition from Shell. And they expect to drive the current production of 6,700 barrels a day to up almost 5-fold in the next year or two, and then reach perhaps 60,000 barrels a day. So it's major growth. And what you see here is a picture of one of these plants, and the picture I showed you earlier, where eventually you see more plants being built, basically, and you don't see any environmental impact in the area. This project is 30 kilometers from Cold Lake, And many or most of these oil sands projects are within driving distance, probably within half an hour or maybe 45 minutes tops of Coal Lake. So you don't have these camps like you have in Fort Mac, where people fly in. There's actually 2 airports in Fort Mac. One is in the city and one is north of the city by about an hour by car. And that's where most of the people fly in if they come from Kelowna or Victoria or Newfoundland. You don't have that in Coal Lake. You have people who live in Coal Lake, have a family there, and kids go to school, and it's a much more healthy environment than what you see in Fort Mac. So the CEO here says, for example, Coal Lake is a nice place to live. There's no need for a fly-in or fly-out workforce like you have in other parts of the oil sands region, specifically Coal Lake and Fort McMurray. And this is my last slide here. This is the Air Force Base. I used to live myself. I was in the Air Force for 4 years, and seen jets flying over my head all the time. I haven't seen that for a while, and I've been to Coal Lake many times now. It's interesting to see these jets flying in very close proximity to the city, and because once you go north of Coal Lake, there's basically wilderness, not much there. But it's a fairly large Air Force base, over 1,700 military personnel and over 400 civilian employees, so it's over 2,000 people, which is huge for a town of 16,000, 17,000, and has been there since the 50s. So that provides some stability, and we expect in subsequent phases of the Coal Lake project, as Scotty will talk about, that we will build smaller houses, more geared for the lower end wages of the military. But phase 1 of the project, which we'll talk about now, is geared more towards the oil sands projects, because the price point of these houses will be in the $500,000 range, slightly more upscale than the current basic houses in Coal Lake. So let me pass it over to Scotty here, who will take you through a bit more detail about where we are in Coal Lake and what we're doing on our piece of land. Scotty.
Thomas, thank you. That was wonderful. Good evening, everybody. This is, for many of you know who I am. I'm Scotty Grubb, and I've been a general partner in Prestigious Properties for the last 8 years. And so most of my time is spent raising capital for the company. And to date, we've been very successful at that. And I would say, to the better part, all our investors are quite happy with what we've produced. We've never lost a nickel. So here we go into Coal Lake, and so now it's more of a real estate play. And why are we there? I think, well, Thomas talked about that earlier. I mean, we look for opportunities, and several years ago, as we looked at where the economics of Alberta were moving to, we looked at Coal Lake, and we found this piece of land. And as you look at your screen, you see that little red box, and that's where the land is located. If you look at the Coal Lake, going back about 12, 13 years ago, was actually made up of 3 separate areas. One was Coal Lake North, which was around that red dot to the north section. There was the Coal Lake South, and then there was the Air Force Base. And so they didn't make good economics as they grew, so they decided to amalgamate them into Coal Lake, the city of Coal Lake. As you look at this map, you get a size and scale of where the airport is, and that is actually in the district of Bonnyville, this whole area in the middle here. And our land is actually in the district of Bonnyville. But that's a story I'll get to here in a minute. This road that runs between the two, when I first went to Coal Lake, that was a single-lane road that went through. Today, it's a 4-lane highway. The sections between the two towns are made up now of shopping malls and shopping centers. It's for people who hadn't been there for a number of years, it's quite amazing to see the change. Most of the growth has taken part today in terms of housing is around the two centers. So to To the west of the northern part of Cold Lake, there's many subdivisions in here, and there's many subdivisions around to the eastern section of southern Cold Lake. As you go up and we go to the next slide, it's there we go. So, oops, went one too many. So here's the section of land is made up in two sections, the north section, obviously, and the south section. It's comprised of just under 300 acres, so it's a very large piece of land, and highly desirable for many reasons. This section of land we see to the east of it is actually still part of the city of Cold Lake, and these are half-acre subdivisions that have been developed over the last 18 years. As we acquire this, the beauty of it is the services for this area we're going to connect to. So in everything that we're going to develop, all the lots have Cold Lake City servicing. That's a very important issue, because in many of the other areas of Cold Lake, they don't have the servicing, and they're relying on on wells and different types of sewage systems that this gives a huge quality to what we're doing. So the land is, we keep in mind this is 300 acres. So when we sat down 3 years ago and started to look at how we would build this, one of the things that came very clear from talking to the mayor and all the various engineers and city councilors was that Cold Lake really didn't have sections of communities. It had these areas where we see today where there's lots of houses being built, these subdivisions which are very crowded, smaller 50-foot lots by 90 or 120 feet. And as you know, the boys from Alberta love their trucks, and they like their snowmobiles and their and all the toys, the motor homes and all that. So the one thing we looked at was the opportunity to bring to the city a complete community. And within this whole 300 acre parcel, that is what we're doing. So if you look at the legends down here, it gives you some indication of how we've thought it out. We, in the progress of this, because we are guys who have huge experience in multifamily. We know how to run apartment buildings, we know how to do that, and we have done some small pieces of land before, but as we went into this development, we had to bring alongside a partner who had that experience, who had the engineering team, and would give you as investors and us as major investors in our, that we had the proper people to develop this. And we brought along a company called Canadian Wetlands. And I won't go into the story tonight how I met David from Canadian Wetlands, but David Periodoff is a very talented guy in this area, understands how communities like this, how to build, and what makes them attractive. So what we've done here is we've used this land in a way, as you can see by the legends here, we will have, in the wintertime, they'll have skating ponds. They've got in excess of 20 kilometers of roads running through here that'll be for cross-country skiing and snowmobile tracks. And there is lots of areas where that will leave the forestation in. And we'll also, unlike these other places, because even though we have bigger lots, we'll enforce restrictions as to how motorhomes, snowmobiles, and all that will be stored. So that I just want to explain this is really, it's a really important issue in why you should invest, because you're investing in a community, not just another subdivision, and that, as I go through the next part, you'll see is a really key issue. So within that our first phase is 32 lots, And all these lots are a minimum of half an acre. Some of them are almost 3/4 of an acre. And if you go to our website, you'll find that there is every detail on every lot is laid out within the heights at English Bay. And it's interesting, English Bay is probably the best known land feature in Vancouver. It just so happens that this part of the lake is called English Bay. And so there was English Bay Estates, which is down here, and now we have the heights in English Bay across the road. This is the main road running through here. And we are, to give those who don't know, obviously, Cold Lake, it is no more than maybe a 5 to 8, 9-minute drive right into the shopping center in town. So it's very accessible. And I'm going to talk about this even more, but what we're creating here is like the British properties of English Bay. It'll be the place that people want to live. It'll be a sense of community. We have engineered and detailed this to make sure that as we follow this through, because it's a 6, 7, 8 year development, that it will meet all these prerequisites. So this, you see the first 32 lots, and as I mentioned, I've just mentioned here, this is a master planned residential community, and it is important that we keep that in mind as people who want to invest their money in real estate. Why should you be there? Why shouldn't you buy somewhere else if you thought of the Cold Lake area? It just gives this huge added value to what we're doing, and it really there is no comparisons to anything that's been built in the region so far. So as I mentioned, there's 32 acres. These lots, unlike the ones in town, they actually have some views of the lakes. As I always tell people from Alberta, the ocean view is really bad in Calgary. It's very nice from West Vancouver. But anyway, that's just part of the other issue in Cold Lake to date in all the developments is the water table is extremely high. And so they're building these smaller lots with homes that have basements that require sump pumps, and water has become a huge issue around that and a very expensive one to maintain it. So, and as I mentioned a little bit earlier, all our lots will have full city services, fire services, and everything will be included. So it's so that kind of gives you a kind of a first impression of what we're trying to build. And as you see on the screen, we're going to have, this will be built out over a number of years, and it will also bring some different stages to it and different pricing to the different lots. To give you an idea, just as we've discussed about what buyers are paying for today, in the $450,000 to $500,000 range is a 50-foot lot or 5,000 square feet. We're offering, for the same price, a half-acre lot, like 4 times, in fact, some of them are 5 times the size of these equivalent lots. And so the value add is, if you put yourself in the position of a local buyer, where would you want to build? Where would you want your home? And keep in mind, the numbers last year in Cold Lake of houses built, there was 485 transactions, MLS. There was, and within that, it's very hard for us to get precise numbers because a lot of them were done by private builders, but there were in excess of 100 new homes that were blended into that transition. So we're really looking for is about 15 to 16 lots or 15 homes in the first year. So it makes it very doable. So these are some lot size comparisons. You look at one at 156,000 for 6,600 square feet, as opposed to for $40,000, you're going to 4 times the size of your property. And so in future values for people buying, because everybody buys property today thinking, where will this go? Where will my value be if I put my family there and I invest my money in it? So this is really important. The current homes, as you see, as the way these lots are built, they're all jammed in, and it's extremely crowded. And I've been up there on many occasions, driven around through the summertime and the wintertime, and quite often you can't even get down the road for the number of trucks blocking the road. So this is kind of gives you a little overview of some of what we see as values in the current housing. And this is what we envision it to look like in our subdivision. So much more open, much more family orientated. And I will talk about later about how we're going to build this, because it's really important that if we're going to use engineered homes as opposed to stick-built, which up there, because of the shortness of the season, tends to, you're having a construction site for 2 or 3 years, and it's very messy. So let's look at the opportunity here and how you become involved. So we as developers look at different ways to raise capital to make this an efficient move ahead for our current investors and ourselves. So we are in essence, we're selling lots to investors, where eventually we will sell them to the homeowner and lot owner at the final stage. The key being that in selling these lots, we then raise sufficient capital both through construction financing and the lot values that we can put in all the roads and services. We're offering to you what we had bank appraisals on most of the lots, and in the information, if we haven't sent it to you, we'll be happy to do that. We're offering the investors a 10% discount from the appraised value. Then what happens is, as you go through that process, and you will actually have to put it down a 25% deposit to secure that opportunity. You have a period of time, obviously, to remove the subjects after you put that down, and should you not be able to get the financing or whatever, then that money would be returned to you. It's held in trust by the lawyers. But then when you do buy it and you move through at that stage, we would give you an option agreement, and what that option agreement really means is we're going to have the right to build a house on your lot, and we'll sell it to the end buyer. And so we've kind of met both ends of the stick here. So that's, and we will repurchase it from you. So if you consider that if you bought a lot that was $200,000, and we give you, and you put down 25%, that would be $50,000 if you could get that type of, and you get the financing on the balance, we're going to give you back 15%. You're going to get $30,000 based on a $50,000 investment. If you take that numbers, it's a high 60% cash-on-cash return. So what we're trying to do here is find ways to make it a very real and move-ahead plan to put in the roads and services, give you title to the lot, and we'll build some, we're going to build, immediately we're going to build show homes, and these show homes will then be sold, or will allow the locals who are coming into that to buy a home. And when they do that, they obviously take you off title at that particular time. So in terms of investments, whether you look at the stock market today, if you look at any market today, the reality is buying real estate is probably one of the most secure assets you can get. And especially as Thomas has spent some time showing you how this area, there is so much money invested here. This is not short-term money. This is long-term money. And we're extremely confident that the economic growth here will continue. So if you bought a lot, here's a scenario at $229,000, and now you got a discounted price. You have a lot price of $206,000. If you put a 50% down payment, it'd be $103,000. Your option fee would give you back immediately on closing $30,000, almost $31,000. So the discounted investment is actually $72,000, and your loan amount would be $103,000. The interest payment, which there's a mortgage, so this is 24 months of interest. You would at that point, that's actually a flow through. It's a write-off against it, so it's not a cost you bear. So the total investment with a discounted down payment and interest. Estimated return based on these numbers is 26%. So as we look around and where we want to put our money today, Thomas has a saying that he has basically franchised, and it says, don't wait to invest in real estate, invest and wait. Because the value, as we've shown you in earlier graphs, the value continues to grow, whether you put a house on it or not. If you do and you put the right home and the right people in there and you develop the right community, the values go with it. If you were to look at it with a 25% down payment, which we talked about earlier, on the same lot, less the price, your lot value $2,600, less down payment, option fee, investment discounted is $20,610, your loan amount is $154,000, interest goes up a bit, and your estimated return is 46.5%. Now, we can look at all the various risks in each scenario. We believe that realistically 32 lots will blend into this neighborhood very quickly in the first 24 months. And given what I've just explained to you about what the competitive issues are, which are the lots in town, 50-foot lots in crowded subdivisions, I don't think that we will work at making sure that we put a very quality product together here, and we have committed our own funding and our investors' funding to make sure that this is done. So this kind of gives you an idea about the community. It's very unique, and it will be the only one in the Cold Lake area that will have these types of amenities built right into the actual community. I don't know that I've been to Cold Lake a few times. Actually, the first time I ever went up there, it was in June. And believe it or not, it was around 28, 30 degrees. So it looks very placid, and the lake looks very inviting. And they do have lots of people water skiing and sailing and all that. But I would prefer Hawaii to do all that kind of stuff, or Mexico. But in the wintertime, I've been up there, and it's absolutely spectacular. It's it's quite an amazing. The lake is huge. It just disappears over the horizon. And as Thomas mentioned, it does flow all the way to Saskatchewan. So people who live in that area really enjoy the four seasons, and the fact that there's ice fishing, there's cross-country skiing, and there's golf for a period of the year. So one of the things that we've been working on in the last month or so is we've engaged with different designers and home builders to actually come up with unique designs. I've been up to Fort McMurray a number of times. I've been to Fort St. John and Dawson Creek and these places. And quite honestly, the stuff they build is very boring. And you know what? If for the same money you can build something that's much more attractive and has some individual looks, and we have we've put a lot of energy and a lot of time in and brought the right people in that will make that work. obviously these homes, because of the conditions up there, having a larger garages is very, very attractive for most people. It houses their toys and everything else, and it's one thing that we've incorporated into the whole, the grand scheme of the community, is to have kind of off-site or off your property storage of boats and snowmobiles and motorhomes to keep the place really tidy. So this here is the team. Some are very good looking, the Scottish guy over here. The rest are okay. Thomas obviously is the founder and the main guy in Prestigious, and my partner, and as Mike, the good looking guy from Calgary. We have Rick is what works with us within Prestigious Properties, the asset manager. We have Michelle and Marianne, who are in the Canmore office. We have Denise, who is my left and my right hand, and the most organized girl in the world, and I'm sure many of you have dealt with her. And this is David, and David is one of the design guys who's been brought along to work with this David up here, who is the founder and the president of Canadian Wetlands, and who is our partner in this whole thing. Leanne is the lady who is his partner, and most of the time she's the boss, and she is a wonderful lady and keeps us together in the many, many meetings that we have put together. Keith down here is the guy who runs our property management company out of Calgary, and as a property manager, he is amazing. So we're very fortunate to have this group of people. So we've been around for a long time, 15 years since Prestigious Properties was invented. Thomas had been in it for a period prior to that. We operate today and manage 803 acres of farmland. Our investments have we always been perfect? No, we've made a couple of little flaws along the way, but none that ever really had major effects on our investment funds overall. As we went through the times of 07, 08, and 09, as the downturn in the market, we proved that investment in real estate was the best sustainable investment anyone could have. And where the markets all went in the tank, our investors were very happy to have solid assets to invest in. So these numbers are all great, but these are true. These are the things that we've accomplished. And we today have a company that has in excess of 105 million in assets. We've transacted probably another 65 or 70 million in different assets. And we try to act in a very, very seamless and transparent way. And we intend to make Coal Lake the same thing. And we encourage you to look at the details of tonight's presentation. And if you have any questions, you can add them to the box on the left-hand side. We'll be happy to answer these. If you would like us to send you a package on the whole community, because it will be a long one in the first phase, please do that, and we'll get that out to you. So I'm going to turn this back over to Thomas now, and he's going to give you the good night. And I appreciate your time tonight, and I hope that we've been as informative as we can. We think it's a very exciting opportunity in the real estate field, and we would like you to join us. Thank you very much. Thomas?
Awesome, Scotty. As Scotty mentioned, there is a box on your webinar panel on the right-hand side, or left-hand side, wherever you put it on your screen, and there's boxing type questions in, and Mike, who is in the background here, moderating the session in the background, will take some of the questions. Just want to repeat maybe some of the key points Scotty made. and maybe tell you also what will happen if you decide to invest. Maybe ask Mike to go to the next slide, perhaps. If you go to the website, and really you should go there, everything is there. There's articles and there's some videos, and there's more details on the lots. And if you're interested, we need to know who you are. We will send you a full package with the purchase agreement and the option agreement and the architectural guidelines and home owner association guidelines, because we will have fairly tight architectural controls on the whole subdivision, so we don't want local builders to muck up the subdivision and build weird stucco houses or Tudor style or certain types of houses. So every house which has to be built actually will be reviewed by 2 architects. We have brought on board part-time to review applications for constructions. We have a fairly high-end subdivision. So once you get your package in the mail, which takes a few days, have a look at that. Phone us with any questions. Then you should choose your lot. And as Scotty mentioned, and we showed earlier, there's a number of them have been sold already. We've had quite a few reservations. We have a very wide network of realtors as well, and people. We've been in the business for 15 years, so we expect us to be selling out in the next few weeks probably. You would then sign the purchase agreement and submit your 25% deposit, which is roughly $50,000 to $55,000, because the lots are all in the 200s basically. That's held in trust with a lawyer in Edmonton. Then if you need financing, of course you can buy the lot in cash. That's really up to you. We will hook you up with 1 or 2 mortgage brokers, so you can look at the financing options, line of credit, or maybe a short-term mortgage. That's really up to you. You might get a week or 2, so you can look at that, and then you would remove your financing condition. And then now you have a firm purchase contract. We will, in the meantime, work on the road construction and all the deep services. And we can talk at great length, which we didn't tonight, on all the work we've been doing. And we can show you diagrams in 3D or 2D if you want, where the sewer pipes go and the water pipes and what grades they are at and how many cubic meters of dirt we're going to move. We can give you all the details if you are interested. We then would expect the serviced lot to be available and titled in the probably summer, maybe June time frame. That's our goal here. Because obviously there's snow on the ground right now, we can't really start digging probably until late April. And we would then expect you to close on the lot, let's say June or early July perhaps, and you would then come with the remaining cash to the closing table, and we would give you the option fee that would all be commingled at the lawyer's table. And then you take title to the lot, and then we will in parallel start putting showrooms up and start selling houses. We do not envision selling houses to investors. It's just not a good rental market if you sell houses for $500,000. Now, if you want to buy a house, be our guest, of course, you can do that, but it's really targeted at a local market for people who want to live in Cold Lake. It's not, so this investment option is really a financing tool for us, as Scotty mentioned, and we think it's a good short-term investment opportunity, much shorter than perhaps our typical limited partnership, which currently actually co-owns this piece of land. There's 2 LPs, Prism A and Kings Castle, who've invested about $2.5 million thus far into this project. So if the $50,000, $60,000 minimum check you need here is perhaps a bit too rich for you, you might want to go to our main Presspro website and check out some of our more longer-term investment opportunities. But tonight we just want to talk really about this fairly short-term, 1 to 2 year maximum, short-term investment opportunity based on these lots. Because some of the lots we're going to take out as early as this fall. The majority will probably happen in 2016 and maybe some in 2017. Maybe pass it back to Mike. I was wondering if there's any questions, and then we can go to the Q&A section here. Mike.
Thanks, Thomas. Thanks, Scotty. We've got a few questions that have come in here, and as we go through these questions and have them answered, we do encourage you, if you have more questions, please do take a look at your control panel, and there's a section in there where you can type in a question. We'll make sure they're all answered before the end of the night's over. So a few questions. First one being, can you please clarify exactly how the option agreement works?
Well, it's the option agreement is signed when you do the purchase agreement. So what we're saying to you is that we're buying back from you the option to acquire that property back from you within a 24-month period when we put a home on it and sell it. And for that option, we are going to give you a 15% of your of the appraised value of the lot, not the appraised value of the net value after your discount of the lot back in cash. And so that is really what the option agreement states. That's what it states. I mean, it's a lot of pages of a lot of words, but that's without you having it in your hand and going through and asking the detail. There isn't really much beyond that. You sign the option agreement. We give you 15%. We agree within 24 months we are going to put a home or on that lot or sell that lot. And when the end buyer then takes it over and pays for it, he then you come off title and he owns the lot. But you get your money up front. You make 15% on your money right out of the gate.
Thanks, Scotty. Moving on to the next question here. Question is, can I build my own house on the lot?
I would say, I know Thomas might have some views on this, and Mike as well, but, and David. We don't have a problem with that. If you want to buy a lot and put a house on it, as long as it meets our architectural guidelines, as long as it's built within a required period of time, so that it doesn't turn into a 5-year construction site, I would say most definitely.
Thanks, Scotty. Coming back to the option agreement, question is, after 24 months, what happens if the option agreement is not exercised by Prestigious Properties and Prestigious decides not to buy the lot back?
Yeah, well, you know, on the positive side, we don't expect that to happen. But, you know, life goes on. I mean, there's certain things that we can control. The economic conditions of the world we can't control. So things could happen tomorrow, as we've seen in 07 and 08, to change things dramatically. And if that happened, the reality is that you would own a lot. Would we continue to help you move it along? Most definitely. That would be because we're invested in 300 acres, not in 1/2 acre lot. So it's to our benefit to make sure that that community is completed as soon as possible. So yeah, at the end of the day, but you know, unlike the risks of the marketplace, if you invest your money in a mutual fund or you invest in whatever, and they don't complete, guess what? You're out the money. It's gone. You have no way to recover it. Here you have, you know, you have dirt. You have an asset, and you would own it. So that's, you know, on the risk side of it, that's it. But that's what you as an investor have to really look at what we're doing. Are we the right guys? Have we figured it all out? Are we in a market where could 30 lots be absorbed into the marketplace? I think the answer to that is yes. So the answer being is, to me, we set these conditions because we think they're very manageable, and we don't want to be on the wrong side of that.
Great, thanks, Scotty. And moving along, we have 2 more questions here. Again, if you have any other questions, please do type them in, but we have 2 left. One of them is what is the current status of construction of Phase 1? Well,
it's ground zero, and the reason being is that number one, it's wintertime up there, and there's nothing we can do till April. And so, but we've spent 1.5 years on engineering. The engineering is for all of the 300 acres. So when you develop a plan like this, you have to deliver to the city an area structure plan, and then beyond that, in every phase, every piece of engineering every piece has to go together. So we have got, we believe, one of the best engineering teams to do this, and so we believe that part of it will start in April, and we, as Thomas mentioned, we expect to have. We can't deliver a lot to you as an investor until we put the roads and services in. We can't put them in when there's 2 feet of snow and it's minus 15. It doesn't work. So we have to wait till climatically it's appropriate. And one of the interesting things in terms of a development, unlike say West Vancouver, North Vancouver, or other parts of the city where you have lots of various elevations, although there is some rise to this land, it is relatively light, and it's a fairly simple process for us to develop it out, especially using the fact that we have built all the engineering on three-dimensional scale, and they can actually use equipment that uses GPS to plow roads and et cetera. So that's where we're at today.
And the final question that we have in our queue right now is with regards to mortgage financing on the lot. And the question is do you have anyone that you could recommend that we could use to line up mortgage financing to purchase?
I say yes.
Let me take that question.
Yeah, you take that, Thomas.
Yeah, I mean, it depends a bit where you live, and some people have existing relationships with the Royal Bank or TD Bank or Scotiabank, and they like to deal with them. That's fine, and use them. We have 2 mortgage brokers specifically. We're going to give you the names of both of them, possibly 3, and then you talk to them and see if that's what they want to use. But the answer is yes. We will give you the name of a mortgage broker, and then you take it from there. And as you saw in the numbers earlier, obviously, if you borrow more money, the risk is up, but the return potential is higher too, right? And if you pay all cash, your risk is much lower, but your return is lower too. So then really you decide where in that scale, from no leverage to 80% leverage, do you want to be? That's really up to you. It's not really for us to decide that. That's really a personal decision you have to make yourself, and that's a function of your own overall financial status, which is really none of our business, right? But yes, you had kind of a discussion with a mortgage broker, and then you decide if you want a 50% mortgage or 60% mortgage or 20% mortgage. That's really up to you.
So it looks like we're all out of questions here. Any final words, Thomas and Scotty?
Don't wait to invest in real estate. Invest and wait.
Yeah, I mean, as I mentioned in the very beginning, I mean, I really wanted to participate in Fort McMurray, but really by the time I understood real estate and how you make money in real estate, it was the late 90s, early 2000s, when really prices had really accelerated substantially in Fort McMurray. And it did continue for another few, 5, 6, 8 years perhaps, but I really thought, gee, that wouldn't be nice to find Fort McMurray too. And so really Cold Lake to us, or to me, is really Fort McMurray too. And it is also the greener, the more sustainable oil sands development, because you see obviously a lot of negative media attention on Fort McMurray and the open pit mines and the dying birds, and that makes great media coverage. You will not see that in Cold Lake, because everything is basically everything is below ground basically. So I think it's a more sustainable development, and I think it's a nice growth story. And with the oil prices a bit lower now, we're going to see not the huge labor insanity perhaps we've been seeing in Alberta the last 2 or 3 years. So I think we're going to see more sustainable wages for truck drivers and cafeteria workers and cleaners and oil sands workers. So I think you see the price point come down to develop oil sands projects per barrel. And if oil stays in the $60, $70 maybe eventually $80 range, I think oil sands will be a great long-term play. So, and again, we wanted to create an opportunity, investment opportunity, which is shorter in time frame than our typical 5 to 8 year limited partnerships, because that's typically what we do when we buy and hold. So it's not for every person we get that, because you need a bigger check to write. But I think the returns also reflect that. So you got to look at the potential risk and the potential reward. So I again invite you to go to our website if that's of interest to you. Fill out your name and tell us who you are if you want, and we'll send you a package, and we'll take it from there. And with that, I do thank you for attending tonight, and wish you good evening. Thank you, guys.
Thank you.